Finally, just to wrap up on the videos on the volume point of control series, I just thought we'd move to a workspace with multiple timeframes. We're staying with the NQ, and top left I've got 5 minute, over on the right hand side I've got 15 minute, bottom left I've got 30 minute, and down at the bottom right I'm on the 60-minute time frame. Three of them have got the volume point of control in evidence, and clearly on the 5 minute, let's just pop this up full size, make this a little bit easier. There we are. Clearly ahead of cash market open, we're in a congestion phase. We're building around the volume point of control on this particular time frame, 5 minute, and we've got our volume profile there. So it's giving us a very clear heads up as to what to expect if the market breaks away to the upside or the downside. If it moves to the downside, it's going to move through here pretty swiftly. And in terms of potentially where the index might pause or certainly find some congestion, then we're looking at this region down here where it builds we've got a very dense region of volume down at that level. And this is an aspect of trading whereby when you're looking at a chart for your trading opportunity, and what you're looking at is the opportunity in terms of the chart. In other words, what on the chart is going to cause me a problem? And in terms of the price action, is it going to pause at this level? Have I got clear water? So looking at this from a downside perspective, if you were looking below 980, for example, you've probably got maybe 20 points here of clear water before you start to head into some stiff support building down in this region. So from a trading perspective, that's important, because you as a trader have got to decide, well, if I'm going to put however many points at risk in terms of your stop loss, 10 points, 15, whatever, is this enough for me as a return, 20 points? Am I going to put 5 point stop loss? Is 10 enough? And so on and so forth. That's what it's all about. It's looking at the chart. And that's what also is another facet, if you will, of the volume point of control. It gives you that information to make that trading-based decision. Let's pop that one down. So that's on 5. Let's move over onto 15. Okay, the volume point of control is very deep down here. We've generally basically seen the volume falling away all the time up here in this long trend higher, which has had considerable congestion around this, but nothing like the amount of congestion we've seen around this region. And obviously up at this level, yes, we're starting to build congestion, relatively minor in the context of what's gone on before, but in terms of an upside break, plenty of upside opportunity if we get through 11,000 on up. To the downside, we've got some low volume node here, so nice area to the downside as well. So opportunities upside and downside really on whichever way the market breaks once the cash markets kick in. Just move down onto the 30 minute. Volume point of control is very deep. As you can see, we move through this region. I think I highlighted this on another video. Move through there rapidly to the downside, move equally rapidly to the upside. Now we're breaking away, we're moving up into this low volume region at the top here. So pretty much consistent. And let's just pop the last one up. This is on, oops, there we go. There we go, on 60 minute, similar sort of picture. We've managed we got through there, we came back down into it, getting through this region now. Now we move, the volume is falling away, we're breaking through this region, moving higher all the time. Bit of a doji building there on 60. For this market to continue up, there's very little in the way of volume to prevent it moving higher, and therefore the equivalent volume required down here, if we had our volume profile on here for our volume and price analysis from a Wyckoff Thirds law of effort and result, the effort required to push the market through this region would be substantially less than if we were trying to break through a large volume region down here, or break away from the volume point of control. We've got this dense volume and you're trying to move away. So the actual effort required to move this market higher is going to be substantially less from a volume price analysis methodology than it would be to move through some of these regions here where you've got very high volume. Breakthrough there is going to take some real effort. Lower volume here, move through there relatively quickly, back into congestion at this level, through here fast, and so on and so forth. This is the profile you expect to see. It's all about market profile and the volume point of control. Still in congestion, as you can see over here on 5. And this is what you do the whole time. You'll be up and down the time frames, finding out where your volume point of control is in different regions, what's the volume histogram looking like on the slower time frames, what's going to cause me a problem if I take this trade on a slower time frame. Is it going to give me support? Am I going to hit some resistance? It's all that information that you want to have. This is all based on volume, as I keep stressing in these videos. This is all volume based. It's looking at support and resistance through the prism of volume. Now, if you have the other indicator, which is accumulation distribution, that is looking at it from price, which you're probably very familiar with, and you know, it's a real plank of technical analysis. But if you have both of them, you've got both price and volume areas defined for you, which it's doubly important, if you will, because it gives you both aspects of the support and resistance areas on the chart which are important, and therefore which are like to either provide resistance or offer support, or where the price is like to move into congestion. So thanks for watching. Hope you've enjoyed this particular video. Lots more to come as always. See you soon, and bye for now.